Let's go down to the 15 minutes so you can be disappointed in real time. Oh, look, it jumped into close. Shocker. Is the press release out yet? I'm going to go over everything else and then we'll come back to it. All right, so we moved to my expected move for today. A little bit below the market maker's expected move at 55.17. This is a nice bounce back off of the low, and we still have a decent amount of support at the 54.40, 54.30 level. But things above 5,500 got significantly more bearish into the end of the day. Calls continued to be sold at 90, 95, 5,500, 5,505, 5,510, 5,515. Pretty much all the way out to like 55.30. Some of those calls, obviously, for tomorrow. Neutral positioning is going to be set up overnight, so it probably won't matter too much. And we're still kind of just following the upward expected move here, day over day. I would say that the inflation data tomorrow, I mean, I'll cover CPI more in depth tonight, but I would say hot is going to be slightly bullish. We'd see Fed fund futures trim back. Right now, they're pricing in a pace of cuts that's more indicative of recession than it is a soft landing. And so the soft landing narrative would gain ground if inflation picked up a little bit. We don't want to see deflation, obviously. A softer inflation print, sub 0.2 would probably be fairly bearish, and we would see yields continue to fall, especially on the front end, and the yield curve further uninvert. Hot inflation could trim back Fed fund future expectations to about 25 points of cuts for the next meeting, which are near 100%. But if inflation is hot enough, 0.3 or higher, so not 0.25 to 0.29, but 0.31 and higher, there is a chance that JPOW could say, we're not ready to cut yet because the data doesn't support it. Labor data was slightly stronger at the last report, and so even though it was weak and came in below expectations, it was still stronger than the month prior. And that does leave him a window to say, you know what, we're going to wait till the December meeting, remain data dependent, here's our SEP. And the pace of cuts indicated by the SEP will obviously have a massive effect on the forward pricing of Fed fund futures. ES just broke out of the downtrend, but then spent the entirety of the day basically trading flat after that breakout. Not a lot of momentum picked up, and it almost failed back into the trend earlier today before finding that small bounce. Obviously, the breakout at 5,500 ES, very important. We could see that overnight, or we could see a rejection back to kind of a mean reversion, 54.87.75. The next test to the upside that matters a lot is 55.30, 450. Obviously, a breakout above that would be bullish and open up, that 56.20, 5,600 range. A breakdown here, I think we really just need to focus on like 54.60, 450 or 54.33 to confirm a bearish continuation. Commodities down today. Oil took another massive shit, down 357 points at the end of the day, alongside copper. A lot of this speculation on reduced demand from China. But precious metals moving up. Dollar pretty flat across the day. Japan's JGB action last night, and then mediocre inflation and unemployment data out of the EU today saw pound rise, euro trim, and the yen rocket, which has kept the dollar basically flat. Yields at the back end of the curve continued to fall. And the yield curve on inversion has widened to about 40 points. Correlation on the 3-month now picking up that the market is closed, and NQ probably failing 18,850. You son of a fucking mother bulls. I told you I was going to do it. Pieces of shit. Held it all the way into close. I fucking hate the market sometimes. I mean, it was nice earlier when I was 5xing my port, but this shit pisses me off. Lol, you called it? Yeah, I know. Unfortunately, you have to call it and have the right amount of theta. Carry trade staying at about 6.5x leverage, and getting very close to that 6.4x leverage where the market almost crashed and VIX spiked to 60. Obviously, short paper at the front end, moving up in leverage, 7.24 today, 6.81, as they try to maintain the ever increasing cost to carry on the collapse of the long end. Move pretty flat, drop in correlation today, alongside the rally in tech. Tail risk hedging picking up quite a lot, and another big step up from yesterday as well. With the move up today, we may see this pull back or stabilize a little bit, but there is some out of the money put buying going on, and they're not being shy about it. 52.88% of the S&P over its 20-day moving average. And VIX correlation moved up again today, but we can move down to the 1 hour, kind of take a look at how that's playing out. So a little bit of an increase in correlation into the middle part of the day. That kind of fell off and didn't really pick back up again. Kind of looks like this might be turning around a bit, but we could take a look at that spread on the daily also. Yeah, you know what? Short vol still building, but very, very slowly. You know, we've gone from our peak at like 99.35, and now we're down to about 95.15. So there is short vol coming in. It's just not coming in super aggressively, which means bulls are skittish. Fed fund futures now pricing in a little bit more, and this is one of the reasons for probably our drop in the earlier part of the day, was that we are moving towards 1.2 points of cuts by February 2025, which is, you know, a little bit deeper into recession territory. 1.25, obviously this would be very big. If we move up to, you know, 25 point cuts by Feb, that would be considered like an excessive pace. Whereas, you know, moving back down below 4 points of cuts by Feb, this would be bullish soft landing, bullish softness. All right. Anyway, with that out of the way, we can go back and take a look at GME, which is flat. SPX did find some support on this trend. However, the bounce continues to be weak, and our closes continue to be below the 50 MA. I do expect that if inflation is hot tomorrow, we will see a push back above the 50 and the EMA 30. And tomorrow, should that happen, a rally could carry us as high as 5570 or even back to 5600. However, on the downside, that would mean a failure of the trend and a move to, you know, 5375 or even down to delta neutral by end of week at around 5300. So CPI could obviously cause a big swing depending on what it does to Fed fund future expectations going into tomorrow morning. That's about it. So I hope you guys are all saddled and straddled and ready to go, because tomorrow's going to be fun. Or alternatively, all of the vol that got priced in just get shorted and the market goes up regardless of what the data says. Someone did something with the Ko-Fi, but the Ko-Fi bot didn't read it. I assume you're paying to sneak this in at the end of the video clip. One of my best trading days. Thanks, man. Super excited for the live data and the beta. Awesome, dude. Congratulations. I'm glad you had a good day today. It was pretty awesome. I had fun too. All right. Thank you guys so much for tuning in. Pants are already around my ankles and my cheeks are spread. Nice. It does not look like Ryan Cohen has caused MOAS. Although that 6 cents of price improvement. Seriously though, are their earnings out? What were they? Got nothing. Oh, here we go. Well, that's not. They had an EPS of 4 cents. Ooh, net 14.8 million. That's shockingly low. Q2 sales 800 million. That's why isn't he making more money with all the money? The interest on that should be like 192 million a year. Is he just blowing? Hold on. So you should have 48. So he's just blowing through $34 million a quarter. He didn't buy T-bills. What an asshole. They were at like 5.5% when he diluted. He put it all in a Wells Fargo savings account. Oh God, it's going to yield 0.2%. That $4 billion should have been in T-bills that hour. No excuse. Seriously. That was like right before rates fell. The price on those went up. The gains were nuts. He'll show up in the next earnings. Should have had more yield than he had $2 billion before that. Anyway, ES is holding at 5,500, even though NQ failed 18,850. All right, that's enough for today. I don't want to listen to everybody be depressed about the GameStop that they still own and tell everybody they don't. Thank you guys so much for tuning in. I will see you bright and early tomorrow after CPI and maybe after market open, depending on when I wake up. Later.